In today's video, we're going to show you the ultimate strategy based on secret TradingView indicators and techniques that no one talks about. Here you can see the examples of trades you will be able to take after watching this video. Not knowing this insane trading strategy will put you at a significant disadvantage. You can use this effective indicator-backed strategy on any time frame for different asset classes, including forex, crypto, options, or stocks. During this video, we also will show you how you can get access to our top-notch private indicator, known as Quant Algo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell so that you can keep up to date with new content releases. Indicators are one of the most popular trading tools among traders. However, it is often used wrongfully due to an ineffective combination of the indicators or wrong settings. Given this backdrop, each indicator exposed in this video enhances the previous, thus eliminating its disadvantages if used by itself. As a result, we receive a top-notch secret strategy that works perfectly for scalpers, day traders, and swing traders as well. With that being said, let's begin the strategy building process, considering the euro-yen pair on the 15-minute time frame as an example. As always, let's initially add the first indicator, which will help determine the directional bias in our strategy. Go to the indicators, type smoothed Heikin-Ashi candles, and choose this indicator. In this case, all settings should remain unchanged. With that, when the smoothed Heikin-Ashi candle turns green, it gives an early signal for the trade long. Applying the same logic, when the smoothed Heikin-Ashi candle turns to red, we receive an early signal for the trade short. As can be seen in our example, we have a bullish bias when the smoothed Heikin-Ashi is green, while we have a bearish bias when the smoothed Heikin-Ashi indicator is red. However, this is not enough to take great trades since this indicator by itself may have a lower efficiency when the market is in the consolidation phase. Now, let's move on to the next indicator, which is actually a crucial component of our strategy. So if you are enjoying the video, leave a like on it. Also, let us know your questions and thoughts below or topics you want us to cover, as we always take your comments into consideration and love hearing from you all. Step 2. Go to the Indicators tab, type RC, and choose this indicator. Now, go to the settings and change Open Smoothing to 7. Also, let's switch to the Style tab and disable all unneeded stuff. So, here's a very key point. After spotting, for instance, a green candle in the previous step, we should confirm the signal through this indicator. With that, we should have a green bar along the bottom as well, and more importantly, this bar should be close to the median line, meaning this orange line right here. Exactly the opposite is true for the short trade. After spotting a red smoothed Heikin-Ashi candle, we need to see a red bar along the bottom, which should be close to the orange line. With that, trade should be avoided if the bar along the bottom is deeply above or below the median orange line. Soon, we will explain why this condition is so important. For now, let's back to our example and repeat all the steps, which we have shown you so far. So, here's smoothed Heikin-Ashi candle turns to green, meaning that we have an early trigger event for the trade long. Now, let's switch our attention to the bottom. We can see a green bar along the bottom as well, which is fine. And more importantly, this bar is so close to the median orange line, thus satisfying all our entry criteria. Now, let's back to our strategy. You probably wonder where the stop loss and take profit should be placed. For this reason, let's move to the next topic, where we will reveal unique risk management rules for this strategy, and take a look at more market examples. These rules will enable you to substantially boost the win rate and total returns. Hence, make sure to watch the video till the end. But before we continue, we want to recommend to you our trusted crypto-based trading platform, known as PrimeXBT. PrimeXBT offers multiple products combined in a single account. For instance, if you're an active trader, you can trade crypto, indices, commodities, and forex with up to x 1000 leverage, thus maximizing your profit. All you need to do is go to the Wallets tab, click on Deposit, and deposit funds with your preferred payment method. But what's more interesting is that the Prime XBT grants you an opportunity to earn a passive income in two ways. For those who are not able to or do not want to trade personally, copy trading is one of the best solutions. Open the copy trading tab and choose the traders with the best performance or best rating. Finally, if you're looking for more conservative returns with lesser risk, feel free to earn passive income by staking cryptocurrencies into FI yield. Here's gold 30-minute time frame. As we can see, smooth Heikin Ashi red candle appeared right here, giving us an early bearish bias for the trade short. Next, we can see a red bar along the bottom, and what is more interesting, this bar is close to the median line, meaning that we can jump into the trade short immediately. Firstly, let's discuss where the stop loss should be placed. And here's a pro tip. If the smooth Heikin Ashi candle is too close to our entry candle, the stop loss should be placed above the recent swing high or swing low. Alternatively, if the recent swing high or swing low is too far from our entry candle, we should place a stop loss above or below the smooth Heikin Ashi candle. So in gold's example, the recent swing high is relatively far from our entry candle, so that we place our stop loss above the smooth Heikin Ashi candle. Now, let's consider our complex take-profit structure for maximum performance, taking into account this gold trade as an example. Firstly, we should close half position and move stop loss to the break-even when the bar along the bottom touches the upper bound of the green area for the first time. Then, we need to wait for the price to drop in the green area. Finally, we should wait for the bar color to change along the bottom to close the rest position. Note that if the price fails to drop in the green area and reverses, the rest position will be closed at break-even. These advanced risk management rules will allow us to increase the total gain as much as possible with minimal risk. Exactly the opposite is true for longs. For instance, here's Tesla stock 1 hour time frame. We receive an initial buy signal right here as smooth Heikin Ashi indicator turns to green. Next, we can see that HASI is green as well, and located near the median level. So, we can enter the trade long right on this candle with a stop loss below the previous swing low. Our stop loss is placed this way because smooth Heikin Ashi is too close to the price at this point. So, the green bar along the bottom initially touched the red area right here, meaning that we should close half position and move stop loss to the break-even. Next, we can see that the price advanced to the red area, which is our pre-exit event. Finally, we close the rest position when the HASI indicator turns red right here. As a result, we caught an insane 14% move. As for now, let's consider a few more examples. Here's Bitcoin 5-minute time frame. We also want to add that this strategy can show a lower win rate on the 5-minute and lower time frames, due to the more frequent signal nature. So, we get a green smooth Heikin Ashi candle right here, so that our first step is done. Next, we can see a green bar along the bottom, which is also relatively close to the orange line. So, our entry criteria are met and we can jump into the trade long. We should place the stop loss below the smooth Heikin Ashi candle since the recent swing low is too far from the price. With that, the HASI bar touches the red area right here, so we should close half position and move stop loss to the break-even. Moving on, we can see that the HASI indicator moves within the red zone right here, which is our pre-exit event. Finally, we can see that the bar along the bottom turns to red right here, meaning that we need to close the rest position. As a result, we caught a 3.5% move with a 3-for-1 risk to reward. Now, let's take a look at the example of trades that should be avoided. Here's Euro-Dollar 4-hour time frame. We can see that the smooth Heikin Ashi candle turns green right here, giving us an early signal for the trade long. Also, we have a green bar along the bottom. However, as you can see, the HASI bar touches a red area at this point, meaning that the price is already overbought. As a result, we should skip trades like this one. Exactly the same is true for shorts. Finally, we want to share with you our top private indicator, Quant Algo, which can be used in combination with previously discussed indicators or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access QuantAlgo to get results fast, all links will be in the description and the comment section below. Without this algo will put you at a disadvantage. So if you are enjoying the video, leave a like on it and subscribe to our channel, as it always motivates us to release more new content more often. Thanks for your time, and I'll see you in the next video.